Happy Monday, everybody. I hope you all had a great weekend and are refreshed and relaxed and ready to go this week. I know I am. I had a great week's vacation, enjoyed some beautiful outdoor activities, some golf, some kayaking. Definitely took advantage of the weather and wasn't 100% uh, active with my trading, but I did manage to get some updates on Wednesday for you guys, and we'll go over some of those trades as well as some of the positions I was holding and some that I got out of, and some trade ideas for some of the positions that we talked about that were on the watch list for us last week. So we'll start with the overall tone in the market. It's almost the end of the trading day. It's about 2:30 Central Time right now on Monday. So it's almost the end of the trading day on the first day of this week. And so if you take a look at the S&P market here, the cash market here, SPX, you see that the trend is still holding to the downside. Today it's kind of just a little bit higher. But it's still a little neutral day. If it closes where it is, it's kind of just hovering in this range here and forming a little bit of a doji pattern on the candlesticks. So, obviously the overall trend is still up. It still hasn't broken any kind of uptrend at all. So we still have an overall uptrend in the market with a little bit of a consolidation move over the past several days. It actually had several down days in a row. So what we're looking at is, a neutral-ish market today. So we'll go over some of the stocks that I had on my list last week that I was looking to either continue to hold or to get out of. So I will start with Grubhub. So Grubhub, we got in back here on on Friday of the prior week, I believe. This is, because that was a holiday. So we got into Grubhub on the short side back here where this arrow is. And that was on the 31st of August. And our stop was this ascending trend line, or channel line rather, up here. Sorry. So this was the channel line that we talked about it potentially staying underneath, and we were looking for a trade down to the first target of this trend line here, and it actually did hit that on the day 2 days after we got into the trade. I didn't get out of the trade, and in fact said that I would go ahead and set a stop right around the 50% Fibonacci line from this big down move day, which was on Wednesday of last week. So on Thursday, it did hit that 50% fib, and I did get out of that position just a little bit above the 50% fib retracement of Wednesday's large down move. So that was getting in at 142.38 and getting out at 139.08. So a pretty decent move. Still I could have taken a little bit more profit down here once it hit my target because I was out of town. I wasn't really paying 100% attention to the market at all moments, but did have my alert set. So as soon as I hit my alert, as it neared the 50% Fibonacci retracement, I kept an eye out for it and got out of the position. So not as actively managed as I would like, because I could have probably gotten a little bit more profit down here when it hit my target, which is, it really just hit it exactly. And in fact, went a little bit below it. But, I can't complain. It has come up significantly since then and is still kind of within this channel right here. So we're out of this position, and that is Grubhub. So we'll go into our next stock, which is JD.com. And JD, we talked about, so we got into JD.com back here on the 30th of August, and we're holding it for a swing trade. And if you recall in Wednesday's video, I didn't really anticipate it to come down so hard, but on Wednesday, the market was down quite a bit. So it did have some pretty big gap moves to the downside, starting actually here on the 4th, and then, going into Wednesday as well. And so what I had identified as a stop, I actually pulled my stop down, um, from up here at these pivots to down, I believe 50% of the move that it had on this big down day. So I actually did get out of the position here at this where this arrow is on Thursday morning as it crossed, because we talked about how weekly the stock was closing that day, right? So it had this big red bar. It closed almost at the low of the day, almost at the low of the day, and so that's why I actually held it into the close, not thinking that it would recover so much. I thought that it would potentially stay at this level or even come down a little bit more. It didn't. It had a bit of a bit of a recovery. In this initial spike move, I gave it a few minutes, because that's what we do when stocks gap up. We watch the first 5 or 15-minute high or low for potential areas to get in or out of a stock. So it actually came right back down from that first 5-minute high, and I did get out of it right here at this bar. But it ended up coming back down a little bit more. And if you even look into the following days, so after Thursday, so Friday, and even today, it has actually come back down. So take a look at the daily chart on JD.com, and it does look like it was just a little bit of a consolidation, and it looks like it's continuing its down move. So we got out of it here. So I mean, I can't complain at the profit. Covering my position that I got into around 31. Let's see, around 31.64, and then covering around the 27.12 area. So that's a pretty decent profit, and I can't really complain. But it looks like the stock is rolling back over, and if there is a potential to get back in the stock, it would be below this $26 level here. It does seem to be creating a little bit of an H pattern. We talked about an H pattern before. I believe it was in Twitter at that time. Twitter or Facebook, one of those two had an H pattern that we had talked about, which is kind of hard to get lower from right away. So, this is looking like a little bit of an H pattern here in the daily. And so, it has this down move, hard down move, some recovery, and it kind of curls over and forms the letter H. So if it can't get below $26, in the next couple of days, which it already looks like it's bounced right off of that level almost, you could expect to see a little bit of a recovery. So this is potential for staying above this 26 line, at least in the short term. So we'll keep an eye on JD for longer term consolidation, and then potential for either a bounce here off the H pattern or continuation of the downside. It has kind of this huge chopping pattern, which it has come quite a bit far off of, and so you can see that this level here from $50 down to 35, about $15. It would have to get all the way down to 20 to match that move to the downside. It does look like, if you take a look at the weekly, we have some pivots to the downside. 25.30 and then 23.29 were our targets. So if it does consolidate and move back down, it could get to those levels. But we're out of that position now. It was a pretty decent profit for a swing trade for a few days, and we're going to be, moving on from JD for the immediate future. So next up is Booking.com. We are still in this position, actually, even though I should have been stopped out of this position, but because it's not a straight short position, it is not a short position with respect to shorting the stock. I'm in this position in a call spread, like a short call spread, as well as a short, a put, being short via a put. So because of that, there is no hard stop on this position. And I think what we talked about on Wednesday, which was this day right here, when I got in the position, was that we would put the stop, or a mental stop, right around this trend line here. So this is the trend line that it crossed down below this one right here, this trend line, and then that was going to be our stop. So it actually did cross into that position, into that trend line on Friday in the morning, which actually I was out kayaking on the lake on Friday, so I didn't actually see this move. It was a quick move, to the upside here in the morning on Friday, and then it came back down. So I didn't I didn't stop out of my positions. I didn't sell my positions or cover. So I'm still in it actually. So booking is still looking okay. It did peak above that trend line, but it came right back down. So if you take a look at the daily, it's still weak, and today is a bearish day as well. So we'll look for some continued downside. We talked about 1870 being an initial target on this one, which it did go to on Thursday almost, and then it looks like it's getting back towards that level right now as well. So we'll look for some continued weakness at the 1870 level, down to the 1836 pivot, and then continuing we have 1815.50, 1794, and 1772 as additional pivots. So still in booking, we'll continue to watch for a continued weakness in this stock. And our stop is, because we have a put and a call spread that we've sold, a stop is, I'm going to maintain the stop here at this trend line for now. I've got a mental, you can see I have an alert set at 1893.55, which is like half of the move today to the downside. So if it gets above that, I might keep an eye on it to see how strong it is. If it goes up, and make a decision on whether to cover my position to hold on to some profits. So you could take 50% of the move today as your as a potential for a stop. I'm gonna keep the this alert here, because for my put, because it is a time sensitive instrument, I might sell out of my put if it gets above this level. But my call spread, which is above this trend line here. So even if it does get back above to this trend line, up to this trend line, I'll still be profitable in that short call spread that I have, as long as it stays below there. So we will probably look to sell our put if it gets above this 1893-ish level, but we'll maintain the call spread. So just a little bit of a insight into what I'll be doing based on the type of instrument that I have. In this case, a put and a short call spread. So that's booking. Next is EA Sports. We actually had talked about EA Sports, being a potential for additional weakness. We got into this position over here on Friday of the prior week. And it actually, when we talked about it on Wednesday, it had come all the way down to 110.98. And we pulled our stop down from, I believe it was up here at 115.50 area, pulled it all the way down to 113.11. Based on this move, actually, we probably should have made it a little bit lower, down here around 112.30 or so, which is half of this move, because it did move quite a bit on Wednesday. It moved from about 113.45 down to 110. And so in order to retain some of those profits, I should have probably pulled it up a little bit, pulled it down a little bit more than 113.11. But I left it there, and I did end up stopping out, or closing out of that position down here at the 113, just actually above the 113.11 level, so around 113.23. So a small profit on EA. So got into it back here. You can see 114.01, got out of it at 113.23. So just a small profit. I could have done better with my exit on that position. It does look like it had some strength after that and has, since given that back up. But I'm not going to be looking to get into EA on the short side, probably unless it clears this low right here, which is 110.98. Because it did show some strength here, it would have to cross down below that area as well. So I'm going to go ahead and take off this alert here. This drawing, which was where my stop was. So we're out of EA. It could potentially, I mean, you see here it's got a little bit of a lower high today than yesterday. So it could potentially, get down and continue its down move, which is what, our expectation was on the stock for the longer term, was for it to, cross down below this 114.88 level and then maintain a weak stance down to 110.43, 105.17, and even 99 or 100, like right around the 100 level. So we can watch it. If it does cross below this on the weekly, you can see this looks like a hammer, a bottoming tail hammer. So if it does cross back below 110.98, we can look for an additional trade to the downside. So we'll go ahead and put an alert there right now. So that's EA Sports. And a couple other names we were talking about getting into last week, which we did take some trades on, are Zillow and Facebook and Twitter. So we'll go over those three right here right now as well. So Zillow, you can see we talked about on Wednesday, and we talked about it potentially being weak below this trend line, right? And so I said that I wouldn't get into it unless it crossed down underneath this consolidation area, and so I did get short. I think it was 46.90 was the level I was talking about, which is, I believe, below the low of this middle day right here on August 24th, which is the low is actually 46.92. So, but that's, if you look at this as a consolidation area right here, on this up move, and then it consolidated, we've got a lower highs, and it's a range, right? So we talked about this being the bottom of the range, and that we wouldn't get into any short position unless it crossed below that. So actually we got in the position on Thursday in the morning at 46.74. So just below the low of the prior day, and also corresponding with that 46.90 level that we talked about. We wanted to wait till. So we got short on Zillow right here at the 46.74 level. We're still actually short the position, and it hasn't come up back to our entry point yet. And I added a stop. My stop is up here at 47.98 right now. I've got an alert set here at 46.13, which is right about to hit right now. It looks like I'm going to pull it up here to this pivot of 46.30. That could be a potential, at least, alert for me. If it starts to gather some strength at that level, I should be aware of it, because really I shouldn't be. I should be utilizing this entry point now as my stop. So I'm going to pull my stop down because it did make a pretty big move the day that I bought it, right? That I shorted it, right? I could have taken this profit right here, but it actually hadn't gotten to my targets. My targets for this stock is down at 43. My first target is at 43. I'm actually going to put it at 46.90, which was where the entry was supposed to be. So my stop's going to be at 46.90 now. So in my targets, 43 was my first target for this, then down at 38.60 and 37.20. So we're looking for some continued weakness in Zillow, with the potential that it could, have a strong down move and then consolidate and then turn back over. So those are my levels on Zillow. I am still in the position. And we'll go on to Facebook right now. So Facebook, also we talked about getting short below 166.61, which on Wednesday we talked about that. And you can see on Thursday it did cross at the very early part of the day. It crossed below 166.61, and that's where we got short Facebook. So we're still in that position. It has kind of shown some consolidation and is moving to the upside a little bit today as well, today and yesterday. 116.61 will probably continue to be my stop on this position. Even though I am in the money, I do have a profit in this position right now of over $2. In order for Facebook to have a little wiggle room to consolidate and then roll back over, I should really leave this 166.61 as my stop. I have put an alert at the high of today just to kind of keep keep an eye on it, because really, if it gets above this 165 level, that's potentially a negative, and a potential for a bounce in Facebook could be even greater there. So I'm looking for it to roll back down, down to the 156.64 level as my first target. And then we have 144.44 in this trend line, the confluence there as well. So we're keeping an eye on Facebook, still in it, still, making a profit, but because I didn't get out of it right away because my targets were down here, I want to give it some room. So I'm leaving 166.61 as my stop. And lastly, here is Twitter. So Twitter, we also talked about on Wednesday. It was up here. This right here is the bar from Wednesday. So we talked about on Wednesday that it would need to cross below this ascending trend line here in order for me to think about any kind of short trade. And actually, I wanted it to even cross below the 31.86 pivot as well. So I did actually get into it on Thursday as well, below 31.86 over here at 31.74. And it's held below that level. So it's right now it's sitting at 30.49. So right now I'm doing okay on Twitter. It looks weak. It's crossed below this ascending trend line, and could potentially get down to this 26.62 level, which is one pivot. And I'm actually going to go ahead and put another pivot right here, which is a 28 at the 28.43, which is the low of this bar. So I'll think about potentially taking a piece of the trade out, piece of the trade off at the 28.43 level, if not all of it, depending on the strength it shows if it gets down to that level. So that's the first pivot. Second target would be 26.62. So you have some targets here on Twitter. It could consolidate back up to this 31.05 level. So my stop on this position is again probably going to be at my entry point or just a little bit below it. So it may be the high of this day. I haven't put a hard stop on it yet, but I'm thinking perhaps the high of yesterday, or rather Friday, which was 31.40, would be my stop. So we'll go ahead and set that in right there. I'll just label it as a stop, and then we'll go from there, because that would mean if it got above that it was forming a higher high from the prior high. So we'll show that stop on the right, and there we go. So now we have a stop. I'm going to go ahead and pull this alert down as well. So we have a stop in Twitter, and we're still short that position right now, and you have your targets that are listed there as well, in these pivots, 28.43 and 26.62. So those are the positions that we got into last week, and the positions that we are still in as well. Just to kind of go over some of the basic commodities, crude oil, you can see is still kind of in this consolidation, in this little area here. It's in a range between about $64 and around $75. So that's a $10 range almost. So that's the crude oil futures. Once it comes out one way or another from this range, we'll think about potentially taking a trade on crude oil via some ETFs. Right now you can see it's kind of making a little top right here with this diamond-ish pattern. Well, at least it's got a topping pattern here, to lower highs, surrounding a higher high. So we have a little top. We could look to make a trade below the low of this range, which is like about 65, or even down here at the 63.39 level. So that would signal a trend change. So we'll have to wait and see how crude oil acts. So that's crude. Next up is gold. Gold, we talked about it being weak in general. I had taken a position back a while back and had covered it already, and talked about gold potentially consolidating and rolling back over, which it looks like it's doing now. And I'll just go ahead and show you what I was in, which is GDX. And yeah, wow, it's actually pretty weak, and I didn't even notice this. So GDX, we had this this little trend line here is, as a potential break of this trend line being an entry point to get back short GDX. I I completely missed that. This is why having alerts is so important. So this is my prior trade. We got in here on the short side under 2090 and then covered down here at 1854 in that area. So, and then it had started, bouncing and having a bit of a consolidation. Never got really too far above this 1944 level. And we talked about, it rolling back over eventually. Didn't really realize it would happen so fast. But so I had added this little ascending trend line on the, short-term ascending trend line as a potential target for breaching this. If it breached this, rather, that it would be a potential for a short. So it did back here on the 31st, and it gapped down and has just been kind of trending slowly downward ever since, crossing through this 1815 level, which is the prior low, and so that would have been a good entry point right there also, even if you didn't get in up here. Some pivots to the downside. $17 was kind of the 1702 is kind of the longer term pivot that I had on GDX 1702, and if it crosses down below that, it has a pretty big window down here to 1240, which is a longer term low on it, or you could even look at this $13 as the even $13 as a pivot. So GDX and gold are showing a little weakness here, so keep an eye on that for a potential trade. Gold itself has crossed down below this longer term trend line on the weekly, and is still above this 1194. Is above this 1194 pivot still, but it could show some weakness and cross down. Do the same thing that GDX is doing, and you could trade gold via the GLD, which is an ETF that tracks gold. So, anything below this 112.25 level on the GLD, or even down here at the low down here to 111, could be a potential short down if gold shows some weakness. So that's gold and crude oil, the two commodities that I do trade occasionally via ETFs. So that is the only update that I have on the commodities. No trades on those right now. What I will do is do a little bit of research this week on some potential, other swing trades, and I will bring those to you as I do that research. And I hope you guys have a great rest of your Monday and the rest of your week. If you'd like to get some alerts on when I put new videos out, please subscribe. Also, I would appreciate, a thumbs up if you like the video, and, any kind of feedback or comments are appreciated as well. So thanks so much, and I look forward to bringing you some more information later on this week. Take care, and happy trading.